One of Canada's largest banks is saying that 2025 is going to be a challenging year, and it certainly will be if a lot of these tariffs are implemented. We're also going to be getting into many different things such as the Canadian dollar and also what's happening to other currencies. So stay tuned in this video. So first of all, I want to talk about this. This article came out from Zero Hedge. It will be linked below. 50% of Canadian manufacturers considering layoffs if Trump tariffs enacted. And basically it's saying that nearly half of Canadian manufacturers may freeze hiring or lay off workers if US President-elect Donald Trump imposes 25% tariffs on all Canadian goods. Now this comes from a survey of 300 manufacturers, and it found that 48% are considering these moves in response to the proposed tariffs, which is quite shocking when you really think about it, because obviously manufacturing is a significant part of Canada's economy. It's been shrinking and shrinking and shrinking, but still, to places like Ontario, manufacturing is a big part of their economy, and obviously 48% is not a small number. Additionally, 46% are considering postponing or cancelling planned capital investments. Again, this is not going to be good for labor productivity, while 49% say they may shift some production to the US if the tariffs are implemented. It says here, they quote, tariffs will endanger nearly $600 billion in exports to our largest trading partner, 2/3 of which are manufactured goods. CME President and CEO Dennis Darby said, these findings show why we need urgent and coordinated response from governments to protect manufacturing businesses, workers, and families. I mean, this could be one of the reasons why Chrystia Freeland actually resigned, is just because the situation is getting so bad, and she knows that Justin Trudeau, he's not going to be able to deal with this situation, and the leadership in Canada is currently falling apart. I mean, it's falling apart at such a rapid rate, nobody can deny it, but it's really interesting the words that he's chose to use here. So failure to do so will be devastating for our economy, and I totally agree. I mean, the Canadian Manufacturing Index, if you look for the past 3 years, yeah, it's down at the lows, but it has improved somewhat during 2024. And basically what RBC is saying is there's going to be significant challenges ahead in 2025, but they are also thinking that just the Bank of Canada cutting interest rates is going to somehow spur economic growth, which we know is just not the case in the way to look at things. So Canada's economic growth challenges are expected to ease as the Bank of Canada continues to lower interest rates further and more quickly than other advanced economies' central banks. But not right away, and longer run challenges remain. And then they say, indeed, the silver lining of an underperforming Canadian economy, per capita gross domestic product declined for a 6th straight quarter in Q3, and the unemployment rate is up 1% from a year ago, is that inflation pressures have been on a clearer path, lower than in other parts of the world. And basically it shows this chart of inflation, and you can see what's happened here. But you know, we have got that tailwind on inflation. I don't really think it's going to be enough. I kind of agree with what they say in this article, that it won't be enough to push inflation higher at this point. But the thing is, that's because of the weakness in the economy. And if that weakness dissipates, like they're kind of saying here might happen if interest rates go lower, then you're going to see that inflation heat up again. Now, I don't think that that's going to happen. I don't think you're going to see that the economy is just going to start heating up randomly in 2025. I mean, nothing goes down in a straight line, and so much of that is the government that we have to obviously think about that and take it into account as well. So basically, population growth tailwinds are going to turn into headwinds. We've talked about this. So strong population growth in Canada, up 10% since 2019, has prevented outright declines in Canadian GDP. But on a per capita basis, output has been falling like it historically would in a recession. That support from population growth is about to make a sharp U-turn. The federal government's plans to reduce new arrivals are expected to essentially wipe out all previously expected population growth in years ahead. While the final impact on population is yet to be known, the direction will be lower, turning demographics from a tailwind to a headwind. So basically what they're saying is an NPR is a non-permanent resident. So basically what they're predicting here is that non-permanent resident rates are going to go down drastically, which is obviously going to have an impact on the headline GDP number. It'll obviously have an impact on wage price pressures, and it will be really interesting to see how this all unfolds and plays out over 2025, because obviously a lot of businesses and companies have been relying on temporary foreign workers. Well, what's going to happen when that is took away from them? Whether you agree with the immigration or you don't agree, there's going to be consequences from that immigration being brought back down. Now, long term, I think it's good, but actually in the short run, there could be more complications than you actually think. And we saw that Party City is closing. They're basically going bankrupt. So you've got Party City closing all stores after 40 years in business, obviously incredibly overpriced. And that is just another sign of the economy that is not doing well. Obviously, people aren't going to go to these places and be spending money on things that they don't really need. That discretionary spending has really been tightening up. And that's why you see savings that increase, because people are more worried about what's going to happen with their job and the economy. So the Mexican peso posts biggest annual drop versus US dollar in 16 years. The reason why I want to highlight this is obviously we've seen the Canadian dollar that has been tanking recently. And obviously the Mexican peso was so strong for the past couple of years against the US dollar, despite all the other currencies declining. But now you see that super peso is kind of going down at a rapid rate. So Mexico's peso weakened nearly 23% this year, close to the final day of trading per US dollar on Tuesday. The currency's deepest drop against the greenback since the 2008 global financial crisis. And this is why I wanted to highlight this article. There are signs everywhere that 2025 is going to be the year where rubber meets the road in terms of the next financial crisis. Now, that is never something that any of us wish for on this channel. Obviously, it affects millions of people. It affects jobs, economies, all different things like that. But it's caused by the greed, speculation, and risk that builds up in that banking system. And unfortunately, it's very, very cyclical. And we're not talking about just Canada in isolation here. We're talking about the global economy, the United States, the UK, the Eurozone, Australia, New Zealand, pretty much all in the same boat here. Even China's economy is weakening significantly. So all these things, they don't spell good things for the future, unfortunately. But obviously, if you're prepared and not scared, then that is the key thing that will protect you. Just doing something really simple like having a budget is a really, really effective way to actually track your spending, what you've got coming in, what you've got going out, seeing if you're living beyond your means or you're living at your means or you're living even below your means. And that's really, really helpful. By doing stuff like that, you can see areas where you can save money. And especially at the start of a new year, I'd highly recommend doing that. It's really a good thing to do. So obviously this year is not going to be an easy year for the economy. And I just want to read you this. But lower interest rates won't solve longer run demographic and productivity challenges. There is a reason for optimism about the economic outlook in the year ahead as central banks continue to ease off the economy's brakes. But the risk is that long run issues tied to an aging population and weak productivity growth will get worse before they get better. So the good news here is that we're getting further in the cycle, which means that we're getting closer to the end eventually. And that is a good thing. But obviously the worst is not really over yet. And even the banks, the big banks in Canada, they're even talking about this. They're being very delicate in the way they talk about it. But they know what is going on behind the scenes because they're getting the consumers that are calling them. They know the unemployment rate is rising. And they know that essentially in the short term, the Canadian economy is not going to be doing so well. So anyway, guys, I want to thank you so much for watching this video. If you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, you know where to go. You can also help out the channel by using the affiliate link expressvpn.com/marketmania. I will see you guys in